Good morning and welcome back to the Opportunistic Trader. It's 10 o'clock. Markets are all over the place. NASDAQ down, S&P up, and the Dow up triple digits. It's 10 o'clock and I want to introduce Phil Flynn from the Price Futures Group, Fox Business News contributor and a friend of mine for probably close to 30 years. And I have the honor of bringing him on today to talk markets, information, news, and his general thoughts about the landscape. So Phil, welcome.
Good morning. Thank you, Larry. It's good to be on with you. This is very kind of exciting times, isn't it? Especially when it comes to a lot of these markets.
Absolutely. And I'm interested to hear your thoughts on where you're seeing money being made and money being traded.
Well, today, of course, we are looking at a lot of markets. You don't want to knock the stock market. The Dow Jones continues to be the place to be. But I think we were talking a little bit before we went on the air, what could turn out to be one of the biggest bull markets in commodities this year might turn out to be the hog market. We're getting a lot of volatility today, but we've seen this incredible move up on hogs, and it's being driven particularly by two different fundamental stories. One of them is what's known as the African swine fever, which has struck China. There's reports it's gone into Belgium, parts of Europe, maybe even into Japan. And what that does, even though there's no risk to humans, they have to kill these hogs. And so you're seeing a lot of them being taken off the market. It's a very contagious disease, and it's unlikely that they're going to be able to get their hands around this before losing millions of hogs. So you've seen the hog market really explode. We've also seen a situation with this North Carolina hurricane that we're going to lose maybe 1 million head of hogs. Maybe that's too big, we don't know. But we do know this: North Carolina was the world's second, or the country's second biggest state when it comes to producing hogs. They have an estimated 3 million heads of hogs. And if you look at the films of North Carolina, you see a lot of those hog farms are underwater. A lot of those heads will be lost. You can only save so many animals. During the last hurricane in that area, they lost a lot of hogs, a lot of chickens and turkeys, you name it. But the combination of those two stories is going to keep that market going. Very volatile. You can get locked in, limit up or limit down, so you have to be careful. Spreading it might be a good opportunity as well. If you don't want to get locked in, it decreases the risk of that a little bit. But it is something maybe that you might want to look at. But, today, of course, it's all about oil, right? We all want to talk about oil. And oil prices, at least the last time I peaked, was back above $70 a barrel. And right now, going into the inventory report, there's a lot of reasons to be bullish oil, okay? Number one, U.S. oil demand, and I think I mentioned this last week, on a 4-week moving average is at an all-time high. It's incredible to think that U.S. refiners are refining more oil now than they ever have before. And it's because the U.S. economy is doing fantastic. We have one of the strongest economies by any measurement that we've had probably in history. We really do. I mean, if you look at the underlying fundamentals of the commodity, they're good. Maybe we have a bubble out there. I don't know. But, based on the numbers that we're seeing on the energy front, we're seeing the most incredible demand we've ever seen. Gasoline demand in the U.S. Is up and down, but near a record high. Distillate inventory demand, it's up near record highs, a little bit down. But as we head closer to these Iranian sanctions in November, I don't think it's going to be very clear that we're going to be able to make up for that lost supply. Traders have to look at Saturday, this meeting in Algeria between OPEC and Russia, and they're going to try to decide what to do about replacing the Iranian barrels. And we're getting mixed signals. Russia is signaling that at this meeting, they're going to raise production by 1 million barrels. It's very nice, but I don't think it's going to be enough to offset the 1.5 to 2 million barrels we're going to lose from Iran and Venezuela, you name it. Saudi Arabia, on the other hand, they're signaling that they may not want to raise production at all, and that they're really happy with where oil prices are right now. So that can be an event this weekend that could push prices up or down if they decide to make a splash, say, hey, we're going to add 2 million barrels to the market. Oil prices could be down substantially next week. If they under that number, if they don't do more than a increase of 1 million barrels, then oil prices could be up substantially next week. So something that we definitely have to watch going into the weekend. Now, I know everybody's going to be waiting for inventories. We did get kind of an idea of what we might see from the American Petroleum Institute last night. And we did see a larger than expected increase in crude supply of 1.25 million barrels. Now, even though we saw that number in Cushing, Oklahoma, which is a NYMEX delivery point, we actually saw a big drawdown in inventory of 1.57 million barrels. That was more than most people were looking for. So you had a bearish headline number, a bullish Cushing number. But what the Cushing number tells me is that refiner demand for oil is not slowing down in a measurable way. If you want to hear a bearish argument, the biggest bearish argument I'm hearing over the next, few days is a seasonal argument. They're saying, "Hey guys, we're going to see refinery maintenance go into play. We could see oil demand drop by 1.5 to 2 million barrels a day." I don't think that's going to happen. We think that the refinery maintenance season is going to be lighter than average. We think the refining margins are strong enough that the refiners are going to come back online as quickly as they can. So I think that the demand drop that a lot of the bears are looking for, they're not going to get, or they're going to be disappointed with what they get. That means that the inventory numbers are going to be a lot tighter over the next few weeks than people think. So that's my bullish argument to counter what their bearish argument is for the next couple of weeks. From a technical viewpoint, just for today, if we look at November crude, we're going to see a lot of resistance on November, which is now the front month, at 70.39. So that's a number to keep an eye on today after today's report. On the buy side, the trend lines are pretty tight. We're looking for 68.92 for tight support. A lower support around 68.48. So those are numbers that you want to focus on if we pull into those for the report. So, when it comes to products, the refiners are doing everything they can to get supplies of distillate up to average going into winter. They've been below average. They've done an incredible job. Keep an eye on the 5-year average on distillates, because that's going to be a number traders are going to key off of, because it could change refining habits a little bit. It could cause them to slow a bit if we get that number back to average. So watch that. As far as gasoline, we're going to look at that. We expect gasoline demand to be strong partly because of the hurricane that we had, Florence, because everybody was filling their gas tank up. So we're expecting gasoline demand to be strong. From a retail gasoline viewpoint, nationally, we've seen prices fall 17 days in a row. That could change because we're hearing about a refinery problem here in Indiana, which could cause gasoline prices in the Midwest to go up. So if you haven't filled your tank and you're in the Midwest, I would go right now before they can raise those prices on you. So that gives you a pretty good update, Larry.
No, I appreciate it, Phil. Thank you very much. I just wanted to go over just a couple of things just for,
Sure.
To help me as well as everybody that's in our membership and watching you around the country. On on the hogs, I've probably traded every contract under the sun, but I've never traded bellies, hogs. I probably should put a one lot on just for posterity's sake. But my question to people that do trade it, you mentioned there's tight limits on that stuff, and you kind of get squeezed and all of that. So how do you think would you play this by something like buying the front and selling the back, or how would you play it where you could maybe do it and eliminate some of the risk in a position?
Right now, we've been buying the front and selling the back. We were buying October, selling December. We were buying December, selling April, buying. We were also buying April, selling Feb, I believe, as spread. So buying the front and selling the back has been a good way to play that. The other way is the options are pretty thin, but if you get some of these worst case scenarios, I use the last disaster that we've had when it's come to the hog market, and that was the PED virus that we had 5 or 6 years ago. It was about 5 years ago. That created one of the biggest bull markets, and we saw the price of hogs move up almost $1, which is an incredible move.
What kind of percentage is that?
Oh my gosh, I'm trying to remember here. I have to pull out my chart, but it was an incredible percentage. I mean, it was over 100%.
Oh wow!
From where they were. If I can go back, if you guys can,
That's fine. Are you thinking
T for 2 for a minute? Okay, so T for 2 and 2 for T. All right, here, just going to go back to our monthly really quick, just to give you an idea. We're going back in time to one of the biggest hog moves in the history of the world, and there we go. And as luck would have it, it's not coming up right now.
Oh, don't worry about it. No,
right, but anyway,
but my question is this the kind of move potentially?
Yeah.
Obviously, you might not get that because that was epic. But is that the kind of move that they're playing for in this space?
What I'm saying is there's an outside possibility for epic. Okay, that's the possibility. There's no guarantees that you could get an epic move like we had before, but trying to go back here just a little bit. We had a situation on the PED virus where we got up as high as $1.33 on hogs. We started at a low point of 70.35, so it was a pretty incredible move here. But the thing is that you could get an epic move. I mean, you could see a situation where the prices of hogs that are in the 50s could get back up above $1 if this disease continues to spread. So this could be just the very beginning of a major move. Now, nobody knows because scientists can do amazing things. Maybe they can find a cure. Maybe they can find a way to contain it. We don't know. But right now, every report that we see is that it's getting worse. Now, you add to that the North Carolina loss of the pig crop, we're getting even more volatility, so it's creating a lot of attention. And if you look at the volume on hogs, it's the highest it's been for years. So people are starting to pay attention. But maybe do a lottery ticket. Buy a cheap dollar call, try to go out a couple of months, and and if this thing gets as bad as it could potentially be, it could be a huge move. Right, I remember when the hog traders were talking to me about PED a few years ago, I was amazed. I'm like, really? It could go that high? And they're saying, yeah, all these baby pigs are getting wiped out. And
wow.
Sure enough, we had an incredible move. So, sometimes early on it looks crazy, but, once you get into the midst of it, it can really get going.
Oh, that's interesting. For me, I'd probably play it through options just because it's probably too risky in general, and I don't really know as much as I should. One couple of more things I just want to go over quickly because I know we're kind of close to the number. But
sure.
On the crude number today, is there anything that you're looking for in any of the components of the number that would sort of be an outlier that would make the market move?
Right. I think right now. What we are hearing is production is a number they're going to start watching. Production last week fell below 11 million barrels a day. The EIA has been lowering their production forecasts. So I think traders are going to focus on that. Distillates, demand on distillates, but supplies to see if they can get above the 5-year average. They'll be major movers. And obviously the headline crude number. If we see a big drop in crude supply, that'll be interesting. And refinery runs, which could surprise people. Most people are going to expect that number to fall a bit today. It might not. We might actually see an increase in refinery runs. And I think any of those situations can get us going. Your biggest fear, of course, is a sideways, report, and that means we're probably going nowhere, and that means you buy the support and sell the resistance today, because that'll probably be the best play.
Well, we'll keep an eye on your levels. So my takeaway, in a sense, is you were talking about a big meeting in Algiers. I think that's probably a bigger market mover than general supply. Is that the takeaway?
Absolutely, and we're going to see. The Iranian oil minister decided not to go. And I don't blame him. Do you want to go to a meeting where everybody's splitting up your share of the pie, right? The Saudis, I don't think, are in a hurry to raise production here. The Russians may pay some lip service to it. I'll tell you, one country that really wants to raise production is Iraq. They're saying, hey, we can raise production. Let us do it. We want to sell more barrels. So that's something to keep an eye on. The other outside risk factors is Libya. ISIS is getting kind of a stronghold in Libya, so that's going to be something to watch over the weekend. But at least we don't have to watch the Weather Channel all weekend, because it looks like the storms have calmed down a little bit.
Thank God for us down in Florida. So
yes,
hopefully we'll get spared. Couple more things. Just one thing that's quietly been moving that really no one's paying attention to, but it looked to me like it moved up, is this nat gas. So I don't know if you had an opinion in nat gas, or if you
we
were
do.
involved.
I mean, we were kind of bearish on natural gas because of the production numbers, but I keep going back to Mother Nature. Mother Nature always has other ideas when it comes to the natural gas market. I mean, we're here in Chicago. It's September 19th, and tomorrow we're going to be over 90 degrees. Wow. I remember September 19th in Chicago where it would snow, I mean, traditionally, usually September 1st, we're putting on jackets, many, many years. But what we've had with this hurricane situation, it seems to have pushed in a lot of the hot temperatures across the country. So you're getting this double whammy. In North Carolina, for example, last week we were worried about demand destruction, electricity power outages. But from a restoration viewpoint, this is probably one of the best post-storm restorations of power we've ever seen. We had Duke Energy on the ground when the storm was still there, trying to bring power back on. So the destruction of demand, even though it was substantial, it's coming back online a lot faster than we saw even in Hurricane Harvey a year ago. So it seems like they've learned a lot about how important it is to get the power back on as quickly as possible. So even though there's still flood concerns, that power is coming on. Now you add to it this incredible heat. So you're seeing a pretty strong short covering rally, which could extend another 10 cents to the upside or 20 cents. And it's just because of the unrelenting weather. Now, we still have a long-term bearish outlook, because I think, if the weather gets back to normal anytime soon, if this winter, for example, is an average winter, it's not colder than normal, then we're going to see supplies build up very quickly, and the mood will change in the market really quickly. But that's down the road yet. Right now, we have to deal with an incredible amount of temperatures above average. That's going to keep the pressure on the upside, at least for the next few days.
Yeah, it looks that way. The last market that I just wanted to go over, and I think to me is one of the most important, but no one's really discussing it, is the bond market and the curve and the price of 10-year notes. So I didn't know if you had an opinion. Right. They're trading at about 306 and change, and now everyone's saying they're quickly going to go to 3.25. I saw that China reduced their holdings, and I was wondering if you had any thoughts there or any ideas that would make sense.
Yeah, I mean, some would say that the bond market is where it should have been a few weeks ago, and everybody's looking at this incredible move on yields. And I know a lot of the bond traders were frustrated we weren't there because for months the Fed has been signaling that this is where we're going to be, right, with the interest rate increases. So on Wednesday of next week, Fed Fund Futures has a 97% chance, I believe, that they're going to raise rates. Also, we're pricing in a move in December. So even though the move has been pretty incredible, it's really getting caught up to where the market was. Do you remember a few months ago, everybody was frustrated because the Fed's talking about raising interest rates, and yields were going down. And it's like, what's going on here? Aren't we going to be raising interest rates? So the market really didn't believe them. Now that we're getting closer to that point, they're believing it.
Well,
what does that mean for Wednesday? Probably fade it, right?
Yeah,
because
I
it's going to
would
be
think.
sell the rumor, buy the fact, or buy the rumor, sell the fact.
But I think the last time down, when we broke 3%, the short interest was so high on 10 years. It was pointed out by Adam Collins from COT data, and he came on, and actually the bond rallied almost 25 basis points just because of positioning. But I think the positions are washed out. I don't think there's a huge short in there at this point. So
you're probably right there for sure.
Yeah. So anyway, I appreciate you joining me today, and I appreciate the information as always. And I just want to say thanks to Phil Flynn from the Price Futures Group. Thanks, Phil, for joining us.
Thanks, Larry.
All right. Have a great day. Bye-bye.
You too.
Bye.